So this is Flattened Delivery Service, and this is going to be our demonstration problem for the accounting cycle for a service business. We're going to go through all of the steps in the accounting cycle for this service business that you went through when you took the grade 11 course, only we're going to do it very quickly. Okay, so this is review. So we have a list of transactions here for the month of January for flattened delivery services. And the first thing that they want us to do is, of course, to complete journal entries for the business and also then post those entries to the ledger. In this video, we're just going to do the journal entries, and then the next one will show the posting to the ledger. Right, so this will be quite a longer video. Right, so let's start with the first transaction here on January 1. It says the owner, D. Flatten, began operations by investing $5,000 cash in a truck valued at $10,000 in the business. So this is an investment by the owner of a couple of things, cash and also a delivery truck that's worth $10,000. So let's go to our journal page and we'll do that journal entry on January 1. Okay, so first we've got to put the date in. So we put the year at the top. In this case, it would be 2020 you could fill in. Mine is going to say 20 dash because the year changes each time I teach the course. You don't have to put a dash in. You can put the actual year. Okay, so 2020. Right, the month will be January. We're going to put a short form, an abbreviation for that. And 1 is the day of the month for the first transaction. So we're going to debit cash, 5,000, and we're going to debit delivery truck, 10,000, and we're going to credit D. Flatten capital for 15,000. Okay, now when you do the entry, you want to have your debits right against the left margin. They're pushed over a little bit here, but really these should be back against the margin here. All right, so debits against the margin, and then credits are indented a little bit. We leave a little space for the credits. Okay, also, we should always leave a blank line after each journal entry. So here's a blank line before we go on to the next entry. Okay, so that's how we're going to do it. Let's go back to our transaction sheet, and we'll look at the next one. So here we have on January 2, it says the business paid $200 cash for supplies. Okay, so they're buying supplies for cash. So we'll go across to our journal page here, and we'll put the date in a second. And we're going to debit supplies for $200, and we're going to credit cash for $200 as well. Okay, purchase supplies for cash. Leave a blank line, and then we go back to our transaction sheet, and we'll look at the next transaction. On January 3, it says purchased $50 fuel for the delivery truck on credit. Okay, so we're purchasing $50 of gas for our truck, and we're not paying for it. It's going to be on account or on credit. Okay, so we go to our journal, and we'll date that on the 3rd, and we're going to use the account fuel expense for the debit. So fuel expense is going to be debited for $50, and accounts payable will be credited for $50 because we did not pay cash. We purchased the fuel on credit. Okay. Next, we can leave a blank line there, and then we'll go and we'll look at the next transaction. So the transaction on our previous page here that comes next on January 5, it says perform delivery service for a customer for $600 cash. So what we're doing here is we are making a sale. We're selling our service, and it's for $600, and we are getting cash on the same date. Okay. So let's go to our journal, and we'll date it the 5th of January, and we'll debit cash, $600. And then we'll credit the revenue account, delivery service revenue, $600. Okay, and that's that transaction, cash sale. Okay, we leave a blank line here, and then we'll go back to our transactions, and we'll go to the next date, and the next date is the 7th, and this also is a sale. It says that we completed a large delivery job, and we invoiced the customer for $2,000. So we sold our services here, but we did not receive cash. Instead, we are sending an invoice to the customer for $2,000, and that's to tell them that they will owe us that amount. All right, so this is a credit sale, not a cash sale. So let's go to our journal page, and we'll put the date in, the 7th. And we will debit accounts receivable $2,000, and we will credit delivery service revenue $2,000. So the previous transaction was a cash sale. This one is a credit sale. So we're going to use accounts receivable as our debit. But in both cases, we use revenue because they are both sales. One's a cash sale, one's a credit sale, but they're both sales. Leave a blank line, and then we'll go back to our transactions and look at the next one. And the next date then is the 9th. And on January 9, it says paid employee salary $800. So we are paying some of our employees a total of $800 salary. So we'll go to our journal page for that, put the date in on the 9th, we will debit salary expense $800, and we're going to credit cash $800 when we pay those salaries. Okay, we will leave a blank line here, and then we will go back to our transactions and look at the next transaction in the month of January, and that will be on the 10th, and it says we received $900 cash for performing delivery services. So this is another sale, and it is a cash sale because we're getting the cash right away. Right, so we'll go to our journal, and we'll date it January 10, debit cash $900, and credit delivery service revenue for $900. Okay, leave a blank line there, and then we're going to go back and look at the next transaction. Okay, so the next transaction is on the 11th, and here we are purchasing fuel once again for our truck. We're purchasing fuel for the truck on account, $40. Okay, so let's go to our journal, and on the 11th, we'll put the date in. It's going to be another debit to fuel expense for $40, and we will have a credit to accounts payable for $40 as well. Okay, leave a blank line, and we will go back and look at the next transaction. And the next transaction is on the 14th. And it says we received $2,000 cash from a customer on account. All right, so we're not making a sale here. We are receiving payment for a previous sale that we made. Okay, and so let's go to the journal and take a look at that one. And put the date in on the 14th. We debit cash because we're receiving $2,000 in cash, and we credit accounts receivable because this receipt on account for 2,000. It's not a sale. And in fact, if you look back here in your journal, it looks like this is probably when we made the sale. You see, we debited accounts receivable here for 2,000 when we made that sale, and now we're receiving the 2,000 from that sale. So debit cash 2,000 and credit accounts receivable 2,000. Okay. Let's go back to our transactions and look at the next one. On the 16th, it says paid for advertising in the newspaper, $170. So we are advertising our services in a newspaper in order to try and get more sales. Right, so let's go to our journal here. We're on the last spot in our journal, so we're going to have to go to a new page after this entry. We've got room for one more. Put the 16th in here. We will debit advertising expense 170 and we'll credit cash 170. Okay, and that's the end of that journal page. For the next transaction, we'll have to go to a new journal page. Okay, so if we go back to the top of this one, it says page 1 at the top, so it's going to have to say page 2 when we go to the next journal page. But let's go back to our transactions, and we'll go to the next transaction listed. It's on the 17th, and it says that we paid a utility bill of $100. Right, so we'll go to a new journal page, and again, we'll have to fill in the year at the top. You can put 2020. I put the dash in there because I use this example each year, but you can fill in the actual year, 2020. January is the month. We have to put it in again at the top of the new page, and it's the 17th. And also, we'll just point out that this is page 2. We're filling in the new page in the journal as well. Okay, so we're going to debit utilities expense $100, and we're going to credit cash $100 for that last transaction that was on the previous page. Okay, we'll leave a blank space, and again, we'll go back to our transactions and look at the next one. All right, so here we have the next one, and it looks like on the 20th, we purchased fuel for our truck, $30 on account. Okay, so we're purchasing fuel once again. So let's go and complete that one now on the 20th. So on the 20th, we're going to debit fuel expense $30, and then we're going to credit accounts payable $30 as well. Okay, and leave a blank space, of course, and then we're going to go back and look at our transaction sheet once again. Okay, so we go back and look at the transaction sheet, and on January 23, you can see here, it's the next one, it says performed delivery services on account. So once again, we're making a sale. This time it's a credit sale. Okay, so let's go to our journal, and on the 23rd, we'll debit accounts receivable $200, and we'll credit delivery service revenue $200 as well. Okay, leave a blank space, and we go back to our transactions. Again, we're looking at the month of January for this business, and the next one is on the 24th. It says paid for repairs to delivery truck, $110. So there's something wrong with our delivery truck, and we've got to get it fixed, and that costs us $110. All right, so let's go to our journal page and complete that transaction. We put the 24th in here, and it's going to be repair expense debited $110, and we're going to credit cash $110 as well. Okay, that's the journal entry for that transaction. All right, let's go back to our transaction sheet once again, and we go to the next one, and here we've got a couple things in here. It says on the 26th we paid employee salary of $800, and we paid office rent $200. So these are two expenses. They're mentioning them in the same thing here. As long as we debit them, the accounts separately here, we can do this all in one entry. Right, so it's going to be salary expense and rent expense, both debited. Okay, so we go to our journal, and we put the 26th in there, and you can see we debit salary expense $800, we credit rent expense $200, and we're going to credit cash $1,000 because they were paid in cash. Okay, so we're getting close to the end of the month here. Let's go back to our transaction sheet and look at the next transaction. The next transaction, on the 29th, it says purchase land for $80,000 and secured a mortgage for this amount. So we purchased land, and we didn't pay cash for it. We got a mortgage for it, which is a type of loan in order to pay for that land. Right, so let's go back to our journal page here and complete that journal entry. On the 29th, we're going to debit land, $80,000, okay, because we now have acquired that asset, but we have a liability for the entire amount. Mortgage payable is going to be credited $80,000. Okay, skip a line, and we'll go back to our transaction sheet once again. This time it's the 31st, and it says withdrew $1,900 for personal use. So the owner is taking some money out of their business, $1,900, and we're going to do a journal entry for that. All right, so we'll go back to our journal. We'll put the 31st here, and we're going to debit deflattened withdrawals. Or drawings, same thing. Withdrawals, drawings, same thing. Okay, we debit that $1,900, and we're going to credit cash $1,900 because the cash is being taken out of the business. Okay, so we have to credit cash when an owner withdraws cash from the business. All right, looks like we got one more journal entry left, so we're going to leave a blank line once again. Go back to our transactions and look at that final entry in January. It says the business secures a bank loan of $20,000. Okay, so we got a bank loan. We take on a loan from a bank for $20,000. It says that $3,000 of the loan is due in the next year, and the rest is beyond 1 year. So they're telling us that in the next year, of that $20,000 that we've borrowed, $3,000 has to be paid back in the next year. The other $17,000 is due back beyond a year. Now, why would they tell us that? The reason they tell us that is for the preparation of the balance sheet. So when we do a balance sheet at the end of this year, or at the end of January here, $3,000 of the bank loan will be a current liability. The other $17,000 will be a long-term liability. So we actually have to split this total liability up between short-term and long-term, and that's when we do the balance sheet. But when we do the journal entry, we don't have to split it up at all. All right, so our journal entry is going to look like this. It's simply a debit to cash of $20,000 and a credit to bank loan of $20,000. Okay, so it's a bank loan. In terms of the journal entry, it's just we received a bank loan. Okay, so that is basically the journal entries for this flattened delivery service example, which is our demonstration problem. Okay, the next one you're going to look at is going to be a separate video, which will be posting those entries to the ledger. Okay, thanks for watching.